Welcome to Wall Street Confidential, the show we give you the inside story as to what really happens on Wall Street. I'm Greg Greenberg, here with Jim Cramer. And Jim, we got another big deal on Wall Street.
Very big.
KKR is buying First Data for $29 billion, premium of about 25% a share over the closing price. However, you say that some traders might have jumped the gun last week.
I looked at the option volume, particularly on the 27.5s and the 30 calls. So let me just say I do not condone violating the law. And the thing that really struck me was that it was so brazen. You just had no reason to buy the calls. Goldman had came out with a very important note saying that this whole industry could be slowing. The quarter for FTC was clearly not going to be great. They're losing a lot of customers. There was no reason to be buying those calls other than if you had the inkling.
Could it have been there's just a lot of speculators out there looking for
takeouts?
Because Stevie Smith had something on Wednesday saying, listen, these options, there's a lot of activity.
Well, look, everyone's saying that this was a natural takeover. That's completely untrue. The cash flows, it's like Tribune. These are not natural. They're natural when the cash flow is increasing, not decreasing. They're natural when the companies are cheap on an earnings basis, not expensive.
And as you pointed out, that Global Payments really sold off on Friday over a bad quarter. And that's a competitor. It's a small competitor, right. $3 billion market cap versus 20.
It's considered to be much more nimble than First Data. First Data is a crummy company. They've done a lot to try to make the company better. But I think that this deal once again demonstrates that the stock market is historically undervalued. Now, what I read most of the time about the stock market and LBOs, management, and private equity is that they're fools. Private equity is just piling on debt. It's just foolish. It's just foolish. It's just foolish. I think that's nonsense. I think that the way investment's done in this country is nonsensical, which is that if a company has declining earnings, nobody wants it.
All right. Since this is confidential, what's going to happen? Let's run through. Is the SEC going to look around, see if someone's trading in Lithuania these calls, like is what happened? It busted those that young Spiegelman over at Merrill and Paxson over at Goldman Sachs.
I hope that the government would look at these and freeze the assets until we figured out exactly who knew and who didn't. That would be the hope. I think that it is pretty blatant. And it's very rare I've seen such blatant call-buy.
Okay, finally, do we like the group on this takeout? You have Fiserv, you have Fidelity National, you have Global Payments.
I like MasterCard on this deal. This is a verification of the number of retail. I like Verifone, too, P-A-Y. It's a verification that there's just a huge number of transactions. Again, I keep coming back to how strong things are in some parts of the economy, how weak they are in others. The weak in the others is mortgage related.
See, you came out with last week the discretionary spending conundrum. See, Greenspan had the conundrum thing first.
Right.
All right. Jim Cramer, Greg Greenberg. It's Wall Street Confidential.